The central bank has raised its benchmark lending rate, known as central bank rate, from 6.25% in June this year to the current high of 16.5%. The rate serves as an indicator of what direction lending rates should take and charge on loans to the borrowing public. As a result, the last 3 months have seen banks add their base lending rate by between 4 and 10 percentage points. Keittany Bank currently seems to have the lowest base lending rate at 17.5%, but charging up to 25% on personal loans. Cooperative Bank has its base lending rate at 19% and is charging new loan application at between 21 and 22%, up from 18% earlier this year. KCB, on the other hand, has its base lending rate at 19% and is charging interest rate at between 21 and 24%, depending on the amount and repayable period. CFC Stanbic, whose base lending rate currently stands at 20.25%, is now charging unsecured loans at between 28 and 32%, from between 18 and 21% 3 months ago. Standard Chartered Bank increased its base lending rate to 23%, pushing its interest rate on personal loans to 26% in a move expected to apply to all existing loans, apart from those advanced to employees, who the bank has a memorandum of understanding with. Equity Bank raised its base lending rate to 25% and says that this rate is partly pushed by its style of charging interest on the principal amount borrowed throughout the period of repayment, as opposed to its rivals, who charge interest on reducing balance. Other banks that have recently raised their lending rates include Chase Bank, that increased its base lending rate to 25%, Development Bank 24%, NIC Bank 24%, and Diamond Trust, that increased its base lending rate to 24%. But while the banks have been swift to raise their lending rates, they have remained stingy, paying their savers insignificant amount compared to what they charge on interest. On average, savers will earn less than 2% on their savings, but will pay in excess of 25% if they borrow the same amount, meaning the banks continue to enjoy a widespread or the difference between the two rates. So far, only the Commercial Bank of Africa has raised its saving rates, effective Tuesday, to 10% from 1.5% previously, in line with the recent rebranding and customer demands, according to the statement from the bank. In making the cost of borrowing high, the central bank has attempted to reduce the amount of shilling in circulation to support the exchange rate and rein in on inflation. But what that means is that members of the public will have to tighten their belts further and look for other investment options beside banks to grow their money, without indications as to when this will end. Phillip, Keittany, KTN Business Today.